Hey everyone, I'm Jeremy Szafron. This is Kitco News. At a significant move today, the Federal Reserve has cut interest rates by 0.5 percentage point, bringing the federal funds rate down to a range of 4.75% to 5%.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
This marks the first cut of this magnitude in over 4 years, and it signals a notable shift in monetary policy as the central bank responds to evolving economic conditions. Now, the decision was nearly unanimous, but Fed Governor Michelle Bowman dissented, favoring a smaller quarter-point cut. Now, this is the first dissent by a Federal Reserve governor since 2005, highlighting differing views within the committee on how best to steer the economy. Now, in their statement, the Fed expressed greater confidence that inflation is moving towards the 2% target, although it remains somewhat elevated at 2.5% as of July. Now, they also noted risks to employment and inflations are now roughly in balance, indicating a dual focus on fostering job growth while managing price stability.
Again, the labor market is actually in solid condition, and our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace.
Chair Powell emphasized the strength of the U.S. economy and the labor market, stating that the rate cut is designed to keep the economy on track. When asked about achieving the inflation target, he remained quite optimistic.
Our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
And addressing concerns about the pace of future rate cuts, Powell clarified. Take a listen.
I do not think that anyone should look at this and say, oh, this is the new pace. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate.
They stressed that while 50 basis point cut was appropriate for current conditions, it doesn't set a precedent for future actions. Now let's take a close look at how the markets closed out on the day. Now, after an initial rally, stocks fell as Jerome Powell indicated that the Federal Reserve is not in a rush to ease policy further following the 0.5-point rate cut. Now, the S&P 500 erased earlier gains of up to 1%, ending the day down 0.3%. The Dow Jones Industrial Average lost 0.2%, and the Nasdaq 100 also dropped 0.5 percentage points. Meanwhile, Treasury yields climbed, with the 10-year advancing to 3.71%. The U.S. dollar strengthened as investors digested Powell's comments. Gold price is obviously a key focus for us here at Kitco News. Initially surged to a new spot high following the rate cut announcement, but then retreated as the market assessed the likelihood of additional easing. Now, of course, we'll continue to monitor gold prices closely, and obviously we'll have guests this week throughout the week as the interplay between the interest rates and precious metals remains crucial for investors. Analysts had mixed reactions. Some believe the Fed's decision reduces the odds of a hard landing and is positive for equities in the long term. Others cautioned that a significant rate cut in a slowing environment has historically preceded market downturns, suggesting investors should remain vigilant. Well, that's all for now. I'm Jeremy Szafron. We'll continue, of course, to bring all the latest updates and expert analysis on these and other important stories for all of us here at Kitco News. Thank you for watching, and stay tuned.